Have you ever sat in a dentist chair and wondered about all the little materials they use? You know, the composites, the bonding agents. They seem kind of mundane, right? But what's fascinating is that sometimes the most powerful and durable business models are hidden in the most boring-looking places. Today, we're going to pull back the curtain on one of those companies, a quiet manufacturer that's built an absolutely incredible franchise right inside your dentist's office.
All right, let's start with this quote, because it really just gets to the heart of the whole story. On the surface, yeah, it looks like a specialty chemical company, but when you dig a little deeper, you find a model that's built on something way more durable than just factories or patents. It's built on trust. It's built on habit. So the real question is, how do you turn something as simple as a dentist's habit into a financial fortress? You know, it all starts with a very simple, very human behavior. A dentist's number one job, their main concern, is a successful outcome for you, the patient. So when they find a dental material, a bonding agent, a composite that just works, that gives them reliable, consistent results every single time, they stick with it. Why? Because the risk of trying something new, something cheaper, and having a procedure fail is it's way too high. So this isn't really a purchase decision, it's a protocol. And that behavioral lock-in, that is the bedrock of this entire business. So let's break down exactly how this simple habit creates such a powerful competitive advantage. We can call it an invisible trust moat. To really get it, we need to understand why these dental materials are fundamentally different from your run-of-the-mill, price-driven commodities. They're just not the same thing at all.
This slide really lays it out perfectly. On the left, you've got your standard commodity chemicals. It's a world where the lowest price always wins. But pre-Prevest, they operate in the world you see on the right. This is medical chemistry. And here, decisions are driven by trust, not by price. The risk of switching is massive for a dentist. The regulations are incredibly heavy. And, like we said, using a product becomes a deeply ingrained habit, not just some one-off purchase. It's a completely different universe. So this moat, it's not just one thing. It's got these compounding layers of defense. First up, you've got the unique chemical formulations themselves, the secret sauce that's hard to copy. Then, there's the years and years it takes to build trust with dentists through thousands of successful procedures. On top of that, you've got all the heavy regulation and certifications, which create these huge barriers for anyone new trying to get in. And then, finally, getting your products accepted in global markets, that's like the ultimate stamp of quality. All these layers work together to create a really, really formidable moat. Okay, so we get the theory, right? The trust, the habit, the protective moat. But how does all that soft stuff translate into hard financial performance? Let's switch gears and look at the numbers, because you can actually see the fingerprint of this trust all over the company's financial statements. And here's your first big clue: an operating margin of around 40%. For a manufacturing business, that is exceptionally rare. It's the financial proof of pricing power. It tells you loud and clear that your customers, in this case dentists, are more than willing to pay a premium for the trust and reliability your product delivers. They just aren't shopping around for the cheapest option. The second clue is just how efficient this business is. A return on capital employed of around 25% is a really powerful signal. So what does that mean in simple terms? Well, for every 100 rupees the company invests back into its operations, its machinery, its inventory, it generates about 25 rupees in profit. This is the classic sign of a business that doesn't need to spend massive amounts of money on big, expensive factories to grow. It grows by deepening trust. This slide kind of pulls it all together. Think of it like a dashboard with 4 key dials. You've got the high operating margin, which screams pricing power. You've got the strong ROCE, showing it's incredibly capital efficient. Then there's the clean balance sheet with very little debt, which gives you downside protection and a ton of flexibility. And finally, when the cash flow from operations lines up nicely with the net profit, well, that confirms the profits are real, not just some accounting game. Together, these 4 dials just paint a picture of a very, very high-quality business. Okay, so we have established that the business is really solid. It's durable, it's profitable, it's efficient. And that brings us to the most important question for any investor, right? If this thing is so good, what is the market not seeing? Where's the opportunity? Well, the answer, I think, lies in the company's quiet, methodical, and almost unnoticed global expansion. You see, the market might still see this as a small local manufacturer, but what it's missing is the birth of a global healthcare brand, being built one distributor and one country at a time. So here are the 3 big upgrades that seem to be happening under the radar. First, that distribution network has quietly expanded to over 80 countries. This isn't just an Indian story anymore. Second, with every new formulation that gets approved, the company can sell more stuff to the same dentist, which is a beautiful way to grow. They're increasing their share of that dentist's wallet. And third, the focus is always on high-margin products, which means that as the company grows, that growth translates directly into high-quality profits.
Most niche healthcare companies like this tend to follow a pretty predictable arc. In phase 1, when they're just getting started, the market pretty much ignores them. In phase 2, as exports start to pick up, you might see a small re-rating. Now, Prevest looks like it's moving from phase 2 into phase 3, and this is where it gets interesting. This is the point where the financial consistency starts to attract serious institutional attention. And that window between phase 2 and 3 is often where the most significant value can be created for people who see the story early.
All right, so let's pull all these different threads together into one clear, long-term thesis. We've looked at the moat, we looked at the financials, and we've seen the growth drivers. Now let's talk about why this has the potential to be a quiet, long-term compounder of wealth for years to come.
A really key piece of this puzzle is who actually owns the company. With the promoters, the founders, holding around 73%, this isn't just a financial investment for them. You could call it identity ownership. Their reputation, their family's name is tied to the brand. And that creates this perfect alignment with long-term shareholders who are focused on sustainable, quality growth, not just short-term hype. This brings us right to the core thesis. If you had to boil this entire story down into just one sentence, this would be it. Prevest Denpro is transforming from a specialty dental material manufacturer into a global formulation-led healthcare brand with durable pricing power. That's it. That's the whole story. And when you look ahead, say, over the next 5 years, the path forward is actually pretty clear. The growth is going to come from selling more and more formulations to each dentist. It's going to come from expanding into higher value, premium products, from deepening their presence in those 80-plus export markets. And this last one is critical. From embedding their brand into dental education so new dentists are trained on their products from day one. Each one of these drivers builds on that existing foundation of trust. So, at the end of the day, this is not a flashy story. You're not going to see it on the cover of magazines. It is a quiet, methodical, science-led business. But for investors who appreciate that real, durable wealth is often built far away from the spotlight, in businesses that make themselves indispensable to their customers, well, this is a story that certainly deserves your close attention.